Thank you very much, John, and good morning, ladies and gentlemen. First of all, let me apologize for my somewhat scratchy voice, but it appears that the cold season is here, and I seem to be embracing it full throttle. In terms of the comments, observations that Gifford just made, I couldn't disagree with anything that he said. It provides a very good and a very comprehensive overview of the implications of the TPP for economies in the Asia-Pacific region. And what I'd like to do in my comments over the next 10 or 15 minutes is basically to focus in exclusively on the implications of the TPP for Canadian agriculture. Now, let me say at the outset that the TPP, amongst the 11 countries that are currently negotiating, when you look at the countries, you realize that the U.S., Mexico, Peru, and Chile are all countries that we have existing free trade agreements with. So basically, in terms of new market access opportunities, what you're dealing with is Australia, New Zealand, Malaysia, Vietnam, Brunei, basically fairly modest opportunities for trade, although obviously the long-term potential for a country like Vietnam is good. So I would characterize the negotiations with the existing 11 countries as modest opportunities, but modest challenges. I mean, clearly, for example, in the case of dairy, you can expect some pressure to liberalize, but so provided the Americans remain defensive on dairy, basically it will be a relatively modest changes that will be required to the existing Canadian import system. But it gets much more interesting if you add Japan and Korea. You know, clearly on the defensive side, we've got a $3 to $4 billion market in Japan. It's $1 billion worth of pork exports. It's $750 million worth of grain exports, canola oil. This would be at risk if Canada was not a member of the TPP, and certainly one if Japan did become a member of the TPP. Korea, we still haven't finished our bilateral negotiations with Korea, and they're at an impasse. And probably it makes more sense to envisage Korea coming in as part of the TPP. So if you add those two countries, what you get are some very interesting numbers. The U.S. still dominates Canada's agricultural exports, but for the first time that I can remember, it now accounts for less than half. Canadian agriculture has always been a much more diversified exporter than the rest of the Canadian economy. But with the upsurge that we got after the negotiation of the Canada-U.S. Free Trade Agreement, we basically had nearly two-thirds of our exports going to the U.S. Today, although they're growing or relatively stagnant in absolute terms, in relative terms, the share of the U.S. market has declined markedly. But then if you look at the countries that we do not have free trade agreements with, Australia, Malaysia, Vietnam, Singapore, New Zealand, and Brunei. Well, if you add up all those countries that we do not have existing free trade agreements with, you're talking about $750 million. So clearly, although there's a lot of long-term potential in markets such as Vietnam and Malaysia as the middle class in those countries continue to grow and expand, clearly the big-ticket items that we're looking at are Japan and Korea. There you've got basically a $5 billion market. And the interesting thing about Japan, it's like the European Union. It's a very diversified market. When you go outside the U.S., EU, and Japan, you find that our exports are concentrated in one or two commodities. For example, in the case of China, it's primarily a function of our canola exports and canola oil exports. we're single market, or maybe two or three commodity markets in most markets. You go to Australia, you're shipping a bit of pork. So the good thing about the existing market in Japan and the European Union, it's very much like our U.S. market, extremely diversified and lots of opportunities. Now, the EU, you note, is up there too, over $3 billion. China's $3 billion 2011, but probably this year will be shipping over, 2012 would be over $4 billion. And clearly it's the developing countries in Asia in particular which are the growth markets. It's estimated that over the next 20 years, 3/4 of the growth in agricultural exports will come from developing countries, and mainly those situated in Asia. Now, if you look at some of Jeffrey's tables, when he looks at agricultural exports, the trouble with the WTO is that although there's a definition of agricultural products in the agricultural agreement, unfortunately, when they use the trade statistics, they also throw in things like wood pulp and raw lumber. So that's the reason why I'm showing exports of, say, $44 billion, and Jeffrey's got a figure there of $60 billion. This is one of the problems, of course, of in agricultural trade negotiations, is the definition of what constitutes agriculture. Now, the Doha is either dead or dying, depending on whether you're an optimist or a pessimist, I guess. And everybody and his dog, particularly our main trading competitors, are busily negotiating bilateral or regional preferential trade agreements. And the big problem with a preferential trade agreement is that it's fine if you're a member, but it's extremely bad if you're not a member of those clubs. So clearly, the Aussies and the New Zealanders and the Americans are busily negotiating, and we've got absolutely no option but to follow suit if we want to maintain our competitive position in those existing markets. Now, it's often been said that one of the advantages of negotiating a regional trade agreement or bilateral trade agreement is that often you can go much deeper and further in terms of market access. It's possible to negotiate duty-free trade across a wide swath of the economy. But the trouble with the bilateral and regional trade agreements is that they very rarely encompass export assistance and domestic agricultural policies or domestic support. And that, of course, is one of the big advantages of the Doha Agreement. The prospective Doha Agreement on agriculture did have not only improvements in market access, but a ban on export subsidies, disciplines on food aid and other forms of export assistance, and some disciplines on trade-distorting domestic support. Of course, in the absence of a Doha Agreement, countries are free to continue to develop agricultural policies as you wish, and you can just imagine that what's on the table now in Washington in terms of a prospective farm bill probably would be a lot more constrained if the Doha Agreement had come into force. Without the Doha Agreement, why should a politician in Washington or anywhere else for that matter give a damn about an agreement that is dead or dying? As I've already indicated, Canada already has FTAs with the U.S., Mexico, Chile, and Peru, and our gains in the remaining markets of the TPP 11 are going to be relatively small. But if they're relatively small for Canada, they're also relatively small for the U.S., and I can't overstress the importance of the U.S. in these negotiations. I mean, they've got negotiating leverage that the rest of us combined don't have. So clearly, if the U.S. Wants to put its considerable weight behind a position, it takes an awful lot to deflect that pressure. But if it's relatively small outcomes expected out of the TP11, U.S. agricultural export interests are not going to be able to really puncture much of the defensive wall that the sugar and dairy lobbies have. You've got to have a big deal to put pressure on your defensive import interests, and that means basically waiting for the Japanese. They've already got an agreement with Korea, but certainly if Japan comes in, and then at least the U.S. agricultural export interests have got more at stake and more incentive to try and ensure that U.S. sensitivities on dairy and sugar don't circumscribe the size of the agricultural package in an expanded TPP. Now, as Jeffrey's already mentioned, it's expected that although I think somewhere there's wording to the extent that people would like to see all tariffs phased out no later than a 10-year period, the reality, of course, is in agriculture at least, you can expect that for the so-called sensitive commodities, there's going to be something less than full liberalization. And this means, for example, the continuation of tariff rate quotas. And the only issue there is whether or not how much you expand the tariff rate quota and whether or not you reduce the over-quota tariffs. And again, one of the advantages of the prospective deal that was emerging in Geneva was that we were having roughly a 25% reduction in over-quota tariffs, plus disciplines on domestic support on a commodity-specific basis. And this would have constrained supply management in Canada. But now Doha is not there. Basically, what you're looking at is expansion of TRQs, and really the main issue is how what percentage of the domestic market is going to be provided to imports. Now, as you're all well aware, Canada is currently starting negotiations on a bilateral trade agreement with Japan. But on agriculture, that's going to be a tough negotiation dealing bilaterally with Japan. I mean, I've done it in the past, and I can tell you request, and they don't offer. Agriculture is super sensitive, and therefore it seems to me inescapable that if you want a big deal on agriculture in terms of getting improved access to the Japanese market, you've got to be in there with the United States. So that means, it seems to me, that you will get a bigger deal in the TPP expanded to include Japan on agriculture than if you try and negotiate a bilateral agreement with the Japanese. Now, as you all know, agricultural tariffs are far, far higher than on average than industrial tariffs. You're talking on a world average over 60%, as compared to industrial tariffs in most industrialized countries of averaging well below 5%. Clearly there's lots of market opportunities in Japan and in Korea on agriculture. And as I said before, it seems to me that one of the advantages of having Japan in the TPP mix is that it would give some ammunition to the agricultural export interests in the U.S. to limit the defensiveness associated with dairy and sugar. Now, some indication of how effective those lobbies are is indicated by how little the Australians, for example, got in their bilateral trade agreement with the United States. There's absolutely no increased access for sugar, and there's very modest changes in tariff rate quotas for some dairy products. So clearly, how far the United States is prepared to go in liberalizing its dairy and sugar markets is going to provide some indication of how far the TPP expanded will in fact expand. if we allow tariff rate quotas to continue, basically indefinitely, at least for the foreseeable future, then the trade expansion is going to come through the expansion of the tariff rate quota itself, the quantity coming in at probably a zero rate, and whether or not you're successful in reducing those over-quota tariffs. Now remember, just as a footnote on supply management, that currently, although dairy, if you put it on a milk equivalent basis, imports, total imports of milk and dairy products are probably something in the order of 3 to 4% of domestic consumption. In the case of hatching eggs, they still have a successful supply management program with roughly 85% of the domestic market supplied by domestic products, and nearly 15% being provided by imports. So it is possible to operate a supply management program with quite a considerable market opening on the import side. Now, in a way of a conclusion, as you know, in the last couple of years, there's been a multitude of public comments about the need to either eliminate supply management or substantially modify it, in large part because of the concern that if we didn't get rid of supply management, somehow we wouldn't be able to become a member of the TPP. Now, it's true that there's absolutely no political appetite in Canada, either at the federal or provincial level, with the possible exception of Alberta, to fundamentally reform Canada's dairy program. And so the question is, can some form of supply management continue if we're going to go into a series of negotiations which sees some expansion in the amount of product that comes in duty-free subject to a tariff rate quota. And a lot of people have, commented on New Zealand comments that, well, you got to get rid of supply management. But the reality is New Zealand is a very astute negotiator of agriculture. And, really deep down they don't give a damn about what kind of production marketing system we have. What they care about is what kind of a border regime we have, what kind of an import regime we have. And therefore, although in a perfect world, New Zealand would like to see North America come duty-free in dairy products, I think they're realistic enough to know privately, at least, that the likelihood of that is extremely remote, to put it mildly. And therefore, the question facing us is, let me just backtrack for a second. Between 1960s and the end of the Uruguay round in '93, the world was preoccupied with one thing: the common agricultural policy of the European Union. And basically, us in North America, and the Aussies and New Zealanders and the Brazilians and Argentinians would all say that the only thing wrong with agricultural trade is the common agricultural policy. But to the undying credit of both the US and the EU, what was accomplished in the Uruguay round was the Europeans realizing that they could not accept effective disciplines on export subsidies and provide improved access unless they modified their existing common agricultural policy. And they made those changes in the early 1990s. They used basically the argument that there had to be an agreement on agriculture in the Uruguay round, and that in order to do this, in order for the common agricultural policy to survive, it had to be adapted. And the other thing that was instrumental in achieving the results in the Uruguay round was the single-minded determination of the United States to, for the first time, get effective reductions in export subsidies, convert all these myriad of non-tariff barriers, variable import levies, minimum import price systems, etc., into a system of tariffs. and to agree to accept some disciplines on domestic agricultural policies. Well, the Europeans have changed to their credit. They've brought their domestic market prices down much closer to world levels. And they now have a common agricultural policy that can coexist with a much more open international market. Now, in North America, we haven't done anything comparable to that, either in the United States or in Canada. We have not, as of yet, adapted our policies, the policies that protect our sensitive sectors. We've not yet adapted them to make them more compatible with a more open international trading system. And that's the challenge facing the politicians, whether they're federal, provincial, or farm leaders currently on supply management. If the reality is, over the next decade, 2 decades, we're going to be constantly negotiating new agreements which have the end result of expanding tariff rate quotas, how do we ensure that supply management can continue in some form? The Europeans, a couple of weeks ago, realized for the first time that the intellectual purity of getting rid of the UK milk marketing boards maybe wasn't such a hard idea after all, because they realized that it was desirable for producers, thousands of producers and a few small processors and a few retailers. It was desirable to have, in effect, unity in negotiating contracts. So under the recommendations of some internal EU reformists, they're proposing that the Europeans, in other words, free up or open up their anti-marketing board type legislation and allow for more single desk type selling. And it's, when you look at what's coming out of the United States dairy policy that's emerging in the Farm Bill, you see there's something that sort of vaguely approximates supply management when it comes to dairy. Not the kind of supply management we have in Canada, but certainly a recognition that one of the big problems in U.S. dairying is the massive fluctuations in prices that occur from time to time. So all of this suggests that, it would be very desirable if people in Canada started to think about, all right, how do we adapt the supply management system to a more open trading framework? And of course, nobody wants to stick their head up above the parapet on this one, because nobody wants to be the first one to say that change is absolutely essential if we're going to coexist. And I'll throw out a couple of examples. I mean, in the past, the agricultural economic fraternity in Canada has, when they have actually ventured to talk about dairy at all, which is rarely, but when they do, the idea is, well, how do you phase out supply management? And the example seems to be, well, you deregulate just like New Zealand. Well, that's, that might be economically desirable from a utopian point of view, but from a practical political point of view, it's political suicide. So it seems to me it's much more productive for agricultural economists to start looking at second-best solutions and saying, all right, if we're going to have this continuous pressure to expand these tariff rate quotas and pressure to bring these over-quota tariffs down, how does supply management evolve? Because what many of these studies don't suggest or identify is what replaces supply management. There's no indication whatsoever as to what are some of the what an economist would call second best solutions as opposed to purely Pareto optimums. Anyway, I guess that's the end of my comments. I think that the TPP, and we've got absolutely no choice but to be in it. Certainly, we would be dead in the water if we weren't in it and Japan was a member. And it does provide the basis for providing improved access for agricultural exports. in a world where, for the first time in many, many years since the golden age of the early 1900s, I guess, that we can see a very optimistic scenario emerging in terms of demand for agricultural products. And Canadian agriculture can certainly share in that growth, but, there's no free rides. And although as much as, agricultural negotiators in Canada are supposed to be good, they can't conduct miracles. And the miracle is that if you expect to gain access to other people's markets, you've got to provide access to your own. We've all got political sensitivities, and the politics of agriculture are almost identical in all countries. We are not unique, and that's what a lot of people tend to forget. Last comment, because I know a lot of people think that somehow dairy and sugar was left off the Canada-US Free Trade Agreement because of Canada's insistence. I just remind people that the first thing American negotiators told us back in '87 was that if you think that Section 22 import quotas are on the table, you're right out of your mind, and that all we're going to negotiate is on the tariffs. So basically, it is worth remembering that countries do have positions that change. By the time NAFTA came, the Americans had changed their minds and wanted to put dairy back on the table, but we said no. We'd look after it in the Uruguay round, and whatever you get in the Uruguay round is what you're going to get. So with those comments, I'll throw the.
Thank you very much, Mike.